And we are live. Trav, I know it's 140 degrees there in Austin?
The feels like is like 115 today Fahrenheit. It's brutal,
God,
man. It's
that's
brutal.
Ew.
crazy.
Yeah.
As I've got my fireplace on in the background here, it's a balmy 47 degrees outside here in central Idaho.
Oh man, I'm really wishing I was there right now.
It's beautiful, man. The hikes here are amazing. The alpine forest. It's gorgeous, man.
Yeah, love the Pac
It's funny
Northwest.
coming from the East Coast, you never hear about Idaho. Like no one ever says, "Go visit Idaho." And it turns out it's absolutely stunning.
It's
Keep it
definitely
that way.
underrated,
It's
and
stunning.
I know Boise's real estate market went crazy the past few years, and like stuff is definitely still really expensive there. But it's such a small city. It's like the probably a fifth the size of Austin, and
Mm,
it's really cool. I mean, it's clean, it's safe, it's dope. I love it. I'm a fan of Idaho.
yeah, yeah.
All right,
But we got to try
guys.
to keep that secret, you know?
Yeah, exactly. I'm sure people that are there are not too happy that I mentioned that, but oh
Yeah, for
well.
real.
Hey guys, guess what? Bitcoin is ripping everybody's faces off. Just over the past week, it went from about 25K to right now is testing 30K. So really, really big moves. We'll talk about what's happening and what's driving that movement. Also, we've got some housing data to talk about, and we've got a couple of new sponsors for the show. Actually, the first one being Koyfin, which I know is a platform that Nikki and Travis use a lot. Trav, why don't you tell us about Koyfin real quick, and then we'll get into it.
Yeah. So Koyfin has become like my day-to-day go-to. Like, we don't do a ton of sponsorships or, things that we try to pimp on the podcast, but I'm actually really excited about this because it's a partnership that really fits in with what we're already using. So Koyfin's basically become my personal Bloomberg terminal. Professional hedge funds, we used to pay 25, 30 grand a year for each person to have a Bloomberg terminal. And Koyfin is essentially like a Bloomberg terminal for individual investors. So I use it literally every day, probably a couple hours every day for like my fundamental stock analysis work. So you can do a lot of crazy cool things with it. Like I do a lot of charting of fundamentals. I look up financials. I keep track of news on my watch list, which is a feature they just announced. We've got custom formulas you can create for screening to find new stock ideas. So there's just a tremendous amount of stuff on the platform. So pretty stoked that we are now partnered with Koyfin, and you can go get a 10% discount on it. So we just wanted to throw that out there. You can check the link in our description, but really happy to be partnered with Koyfin now.
Yeah, the cool thing that I like about it is it's like super affordable. Where, like you said, Bloomberg and some other platforms are like thousands of dollars a year. Like I think pretty much any investor or trader could afford this. So yeah, again, guys, we've got a link in the description. Go let them know that we sent you over there, and they will help us support the show for you guys. All right, let's jump right into it, guys. We've got a major news announcement, which is Wall Street pulled a fake out on us. The SEC has been sandbagging some major Wall Street incumbents. And because of that, Bitcoin's price is ripping. But what's happened basically is just over the past week, we've had some major, large institutional companies come out with ETF applications and different we can call them an exchange, a new type of exchange that we'll talk about. And I've got a lot of takes that people have been posting. There's a lot of conspiracy theories about what's happening, but really just in the past few days, we've seen BlackRock, we've seen Citadel, we've seen Schwab, we've seen Deutsche Bank, we've seen the NASDAQ, Fidelity. All the major Wall Street incumbents are coming out flooding into Bitcoin. And I'm not surprised to see it, but it's funny how the timing works because just over the past month or two, we've seen massive SEC action against Coinbase and Binance, and obviously the fallout from FTX. And I think that Wall Street has looked at this as an opportunity to come up and scoop up all the juiciness as Bitcoin was in this really negative kind of headspace, and crypto is just getting absolutely attacked by the SEC. What do you guys make of this?
We need that meme with that sportscaster guy who's like, doing the finger wave. Now, why would they do this? Interesting.
Yep.
I don't know if y'all seen that meme, but it was on Twitter for a while there. Yeah, I think you said something that is very important. The timing of this announcement is so interesting, with BlackRock essentially filing for that spot Bitcoin trust, and then a bunch of other major institutions following right after within 48, 72 hours.
Yep.
And coinciding with this weird timing of the SEC going after a lot of the institutions that were kind of built from the ground up in crypto, like Coinbase and Binance. I mean, you have to ask the question, why now? Why now is BlackRock doing this? And it seems like the Wall Street firms are seeing an opportunity here to fill a void which can be created by a lot of the existing exchanges being regulated out, or being heavily regulated to the point of essentially being neutered on a lot of things. And so I think it's very interesting. Also, of course, there's a lot of stuff happening behind the scenes with the whole digital currency group, DCG, which is the owner of Grayscale, which is the sponsor of GBTC, the big existing Bitcoin trust, which is, of course, a position that we have had since the fall. And that trust was trading at like a 40-50% discount to the value of its Bitcoin. So there's a lot of interesting components to this. I think overall, it's the big Wall Street players seeing an opportunity, seeing a void in the market, seeing perhaps an opportunity to play the role of the traditional institutions having more trust with the existing regulators and being able to come in and steal some market share.
Yeah, we've got some hot takes from Twitter. Preston Pish was saying, I'm sorry, but after watching BlackRock, Fidelity, Citadel, Schwab, and now Deutsche Bank all applying for Bitcoin ETFs, spot exchanges, etc., only a few days after the SEC drops the TRO on Binance and sues Coinbase, how can't you think that this entire past year was a giant inside job coordinated between the Wall Street parasites and government regulators so they could catch up? Part of me wants to say, oh yeah, conspiracy theory, but I know how the real world works. And yeah, I wouldn't be surprised if there was some back office dealings going on.
And I think at a minimum, the heads of these Wall Street firms are not idiots. So they're seeing things play out, and they're saying to themselves, well, there's an opportunity. If nothing else, even if they're not in the pockets of the politicians, which they may or may not be, right? But even if they're not, they're seeing this opportunity and they're going, okay, I think this is our time to strike. And so, whether Preston's right or not, again, I don't think it really matters. I think a lot of these firms are just saying to themselves, okay, if there was a time to come in and try to make a play for market share, now is that time. And so that's how I would be thinking about it if I was running one of these firms with trillions of assets under management, or at least billions of assets under management. And I think the timing is right to try to strike.
Yep. Here's another tweet. Luke Martin said, the character arc of BlackRock's CEO, Larry Fink, is incredible. Just in 2018, he was vocally anti-Bitcoin and crypto. Then in 2022, he lost 24 million in FTX, which in this little interview he was giving, he basically downplayed it and said it was from a fund of a fund. And, 24 million bucks for the largest institutional player in the world, is peanuts. But then, 2023 now files for a Bitcoin ETF and supports DeFi. So going back to 2014, we were out there saying Wall Street's coming. It's almost a decade later. And this is like not really their coming out party, but it's like, this is where they are just making the biggest, most aggressive grab that I've ever seen in the wake of nastiness. Right. The timing is just impeccable. Whew, man. So I don't know. I think the next year going into the halving, which we've been talking a lot about, is going to be really interesting, right? If we take a look at just the price structure since the market bottom here, it's always interesting to see where peak fear is oftentimes the low, right? Back here in November 2022, when FTX imploded, that was the low. And then here we are after a couple of waves up, now testing 30K. Bitcoin just over the past 3 days went from 26K to intraday, almost 31K today, and then starting to pull back intraday. But price structure is looking really similar to the prior two halvings from the prior two market cycles. So, again, past performance doesn't predict future performance and all that. disclosure stuff, but it's really interesting to see how price action rhymes and how every time that year period before the halving, you start to see this bullish market structure. And now that you've got the biggest players in the world coming out very vocally, not just in support of Bitcoin, but wanting to play and dominate this space is just really interesting timing. And I guess, we can talk about some of the potential downsides of this, which, let's just say some like what if scenarios, right? What if BlackRock does come out and they do get approved for an ETF, which call it spot, call it, a trust, whatever. If they are one of, if not the largest players in the game, do they have the ability then to make changes to the blockchain, right? To go from proof of work to proof of stake or anything like that. And if you look at some of their filing documents, yeah, they have wording in there that says they can do whatever they want. They can manipulate Bitcoin. So I actually set up a Twitter poll the other day and was just asking people what they thought. Is this going to be a net positive because it's going to drive adoption, right? Mass adoption. That's kind of the whole idea here. Or is it going to be a net negative in a couple of years because of potential manipulation? And just taking a look here, you can see about 2/3 of people, 63% said positive adoption, baby. And about 37% said negative because of potential manipulation. So we'll see how it actually plays out. But I think on the positive side, and Nikki, I wanted to ask you about this because if we do get a spot ETF, I mean, that gives financial planners and advisors and retirement funds the ability to really invest in Bitcoin and potentially a handful of other crypto tickers in a meaningful way. What do you think of that?
Yeah, we've been waiting for a while to see if we're going to get this Bitcoin spot ETF so people can use tax deferred accounts to put, Bitcoin exposure into. And something that I just want to point out is, fun fact, Bitcoin's up year to date 80% as of right now. Okay, can we just take a moment and soak that in? That is insanity. And, a lot of people, even if they just have a small allocation to something like a Bitcoin ETF, that could dramatically help improve returns over time. So, it doesn't have to be, people have this mindset that Bitcoin is bad. Do not put this in any kind of 401k, any kind of retirement plan, yada, yada, yada. But if you actually look at the performance of Bitcoin year after year after year, there's been bad years, of course, but it's so incredibly, it's been such a good performer over time, right? If you look at this on a long-term scale, that it doesn't have to be, you have to put a lot of it in your portfolio. So I think that a Bitcoin ETF will help a lot of investors, get a little bit of exposure to an asset class that is still very new. We're still on the forefront. Like you said, we're just now seeing Wall Street come in, aggressively into this asset class. That's when things start to get interesting. So I think there's still a lot of people that don't have exposure to Bitcoin that want it, but they don't want to deal with custody.
Yeah. And one thing we've talked about a lot is just what happened with gold in the early 2000s, right? Whenever, I'll see if I can pull this chart up, but whenever the gold ETFs came out, and some of them were even trusts and similar to what BlackRock is looking to do. But even with that being the case, like that was one of the biggest drivers for gold going to all-time highs. So I think that's kind of the bull case there, right? Is if we do get this spot ETF approved and it does what gold did, the next market cycle in Bitcoin could be freaking massive.
And you still have.
I just think people want ease. They want ease, right? And that's what even though people may say sorry, Trav, I didn't mean to interrupt you, but
no problem.
Even though people say Coinbase is easy, right? Crypto people will say that, yeah, no problem. Open an account, buy it. For most people, it just doesn't work that way. Like they just want to be able to go into their Fidelity account and hit buy on an ETF. Boom. So, but go ahead, Trav.
Yeah, I was going to just say two things. You still have a limited supply of Bitcoin. And if anything, this will just eat up more of the existing supply out there. And so you could see upward buying pressure here, especially during a specific moment in time when they're actually having to initially allocate. And then in addition to that, there's an interesting redemption mechanism in BlackRock's, at least in their filing that they've made for this, quote unquote spot trust. Unlike Grayscale, which has really been hurt by the ability for that trust to get pushed down to a significant discount to its net asset value holdings, the BlackRock trust looks like it will have a redemption mechanism built in so that it can arbitrage away any massive discounts or premiums to the underlying trust value. And that's really important because one of the things that Grayscale suffered from, besides having high fees, was this fact that they didn't have an automatic redemption mechanism. And so the thing just kept trading down at a deeper and deeper discount to the value of its Bitcoin. And so if this BlackRock trust comes to be, then you could have a really interesting vehicle now for 401ks to participate and other investors to participate through traditional accounts where you don't have to worry about getting some massive trade down and a massive discount to the value of the holdings. So I think that's also a very positive potential feature here.
Well said. Yeah. So I don't know. I think the eyeballs will be on the SEC over the next several weeks to see what happens with this, and do they approve one of the incumbents, as they've been so aggressive against all of the other prior ETF applications. And if they do approve BlackRock or one of these other big boys, what lawsuits are going to come from that? So I don't know, man. Get out the popcorn.
What is that going to say, though? That's going to say something very interesting. That's going to say that power rules, because if BlackRock can somehow convince to get this approved when everybody else has been trying and trying and trying, I don't know. That's sketch. But
yeah, I mean, look, they're coming, right? So BlackRock filed, Deutsche Bank has what, $1 trillion or $2 AUM. They're applying for a license to run crypto custodial services. Investco has $1.5 trillion AUM. They're also filing for a Bitcoin ETF. Wisdom Tree, rumors that Fidelity's even coming in. So it's wild. I mean, this is the rush that we were talking about a decade ago, and it took longer than I expected, I guess, in a way, but it's here. And it's to me, though, for Bitcoin specifically, this solidifies the Bitcoin as an asset class when you have all the major boys that are like now rushing in and making this a top priority. Anybody that was doubting Bitcoin's viability as an asset class, like, they really don't have a leg to stand on anymore, I don't think.
That's a great point. And I think this was actually a good thing at this time because we have more uncertainty. In fact, I saw a bunch of people on Twitter over the past 2 months or so saying that crypto is now dead because of what the SEC is doing, that they're going to regulate crypto out of existence, at least in the US. And this is a strong counterpoint to that, which is, hey, if these vehicles are allowed to exist, you've got a validation now from the highest levels of government that there's going to be a crypto ecosystem at some level.
Yep. Yeah, we'll keep a close eye on this over the next coming weeks and months as more develops. But I think this is the catalyst, right? We every market cycle, there's a catalyst, there's a story, there's a driving force, right? 2017, it was ICOs. 2020 and 2021, it was DeFi and NFTs. How awesome would it be if this market cycle was primarily driven by not a hype cycle, not bullshit, not vaporware and white papers, but actual mainstream adoption of Bitcoin? Think about that. That to me would be the most sustainable and real market cycle that we've had so far in crypto's dozen years of history, right?
Isn't everything that's happened in crypto, it's been very doom and gloomy and sad, right, to watch, but isn't everything that's happened kind of led to Bitcoin proving to be the pinnacle, like the true decentralized cryptocurrency? And now we're just kind of seeing that come into play.
100%. And that's why I've always said, I do not invest, quote unquote, invest in altcoins. We trade them to accumulate more Bitcoin and more fiat currency that we can recycle into other investments, right? And right now, if you take a look at Bitcoin dominance, this is something back here in the early spring, I was saying, I don't think we're going to get an altcoin season because of the regulatory environment that we're in. And I think we're going above 50% on Bitcoin dominance, which means that Bitcoin now makes up more than 50% of the total cryptocurrency market cap, which really hasn't happened. We're at the highest levels since early 2021. All right. And you can see it's ripping in a big way. And why is that happening? Well, it's because people are selling. They're either being forced to sell some altcoins, or they're choosing to sell these scam coins and rushing back to safety, which is Bitcoin, which is, again, why I've said you have Bitcoin, which is in a class of its own. And then you have like Ethereum and like other kind of layer ones. That's a separate asset class, in my opinion. And then you have everything else, right? You have a ton of other things where 99% of them are going to die over time. Some of them are blatant scams. Some of them are just kind of startups in a way where they're trying to do something unique, but a lot of them are going to fail too. And there's a lot of perverse incentives behind the tokenomics of a lot of these things. And yeah, Bitcoin is the king, and it's proving that it's still the king, even several market cycles later, and thousands of articles being written about the death of Bitcoin and how we're going to have the e-flipping and all this stuff. Bitcoin is still in a class of its own.
I'm very interested to see how the breakout, if we see the breakout of that resistance level that we're testing today in Bitcoin, I'll be very interested to see how the price action moves into that level. Maybe if it gets through, like what kind of FOMO is going to happen. People that were feeling pretty bearish about crypto in general that maybe pulled money out, maybe they sold. The price action was really sad just a few days ago, right? It was very sad looking. And then it just, in an instant, we have bullish price structure.
Yep.
So it's going to be quite interesting to see how the breakout, if we end up breaking out through that level, how that trends and the strength and momentum that could come behind it as people kind of rush to the exits when all of the attacks were going down.
Yep. And I actually took more profit back here as price was breaking below the 100 period moving average, which I do not regret, by the way. So, you know, I bought the 19K dip, scaled in and out, took more profit here in the 26s, and am now interested in another potential breakout play. Now, as you guys know, I don't buy after like several big green days in a row, but I am interested in looking for another bullish structure type setup. So yeah, we're in a bull market. That has not changed since we really broke above all the moving averages back here in January. And Nikki, like you said, I mean, Bitcoin's up 80% year to date, and it's just absolutely performing like it has in prior market cycles. We'll see what happens over the next quarter and two, but so far so good. And it looks like Bitcoin's doing what it does best, which is just following these longer term cycles.
It's
All right.
bucking a nice trend too against the indices right now, which is nice to see.
Yeah. I'm glad you brought that up. I actually want to show a comparison here. So one chart that I've really been focused on over the past several months is the correlation and decorrelation between the NASDAQ and Bitcoin. So if we kind of zoom out here for you guys that are listening to the audio, what I have pulled up is a Bitcoin chart compared to the NASDAQ index chart. And Bitcoin really started to kind of flatline here in mid-May. So over the past month or 5 or 6 weeks, Bitcoin was actually down, flat to down a few percent, while stocks actually had a big breakout above multi-month resistance. And there was a big squeeze, a short squeeze in the NASDAQ, where we saw large cap tech really take off. And we saw the NASDAQ go up over 16% in just a month or so. And then over the past couple of days, we saw the NQ actually top out and start to reverse. And today it's pulling back, where Bitcoin is actually starting to rip. So we have 3 green days in a row, which is the opposite of the NQ's 3 red days in a row. So where over the past, really since November of 2021, where stocks and crypto topped out, there's been a lot of correlation between stocks and Bitcoin. Most recently, over the past month or so, we've actually seen a decoupling or uncorrelated price action, where, you know, when stocks were hot over the last month, Bitcoin was flat to down. And just over the past couple of days, with all this news of the big boys coming into Bitcoin, stocks are pulling back a little bit and Bitcoin's ripping. So this is actually what I like to see, right? Is when you have Bitcoin that's trading either inverse to stocks where it's decorrelated, or just kind of randomly where it's not directly tracking. So this is, to me, is actually a really good sign. And Trav, I know a few years ago when we were in Bali, you ran data showing that periods of time, there's actually negative correlation between stocks and Bitcoin. I think we're starting to see that again. What do you think?
Yeah, I mean, you'd love to see it. Especially institutional investors, we look for assets that are uncorrelated, that can play, you know, a uncorrelated or even negatively correlated role in a portfolio. Extremely, extremely valuable to have that. So you love to see that. And have seen extended periods of time where crypto and Bitcoin have traded uncorrelated or negatively correlated to stocks. And that would be ideal. Of course, we've also seen some periods over the last couple of years where Bitcoin was heavily correlated to like the NASDAQ and to stocks generally. So it's done both. And you love to be in a position where it plays that uncorrelated or negatively correlated role. So we'll see if it continues.
Awesome. Well, guys, it's great to see this movement. It's great to see the rush to mass adoption and all the big boys coming in. Again, pros and cons, manipulation, you know, favoritism versus more adoption. I don't know. We could sit here and make a bull and a bear case for that all day long, but I think at the end of the day, any more exposure to Bitcoin is a good thing. So, all right, let's move on. So next topic, I want to talk a little bit about housing, because we are still in that weird period. And I think this is something that traders and investors need to really be not ignoring or pay close attention to, because it's just, A, it's so interesting, and B, it's really affecting people on a really direct level, right? There's a housing shortage. We have high interest rates above 6, somewhere around 7%. And builders are absolutely exploding. And the big news this week was housing starts. What do you guys want to start with there?
Yeah, there was a big surprise to the upside in housing starts. It was quite the number that came out. I think it took a lot of people by surprise, and really where it's coming from is we've got an inventory issue. We've got an issue where people that are in existing homes, they're not moving. They've got really good interest rates on their mortgage. They're staying their butts put. So where does that lead us? That leads us to people need to build homes for people, right? And so the home builders, as we know, their stocks have done really well. They've been continuing to sell homes. And the way they've been able to do that is they've been buying down rates and just kind of controlling prices. So basically, home builders are the game in town because people are not really moving much from existing homes. So that's kind of where we're at, is we still have a supply issue. And even though rates are high, home builders have abilities to offer incentives to those home buyers. And that's what's getting people into houses.
Yeah, I think one of the most impactful incentives is 2-1 buy downs. We talked about this over the past couple of weeks, but basically anybody that's worried about the payment or high interest rates that believes rates will come down in the future, builders can basically buy a discount of 2% in the first year and 1% of the second year. So say your first year rate would be 7%, they could buy that down to 5 the first year and then 6 the second year. So that alleviates some of that monthly payment pressure. And then if people believe that values will stay the same or even go up over time, they have the expectation that they can refinance and get even lower rates and lower payments in the future. And so, yeah, like Nikki, like you said, people that don't have any options to buy existing homes, because anybody that's living in an existing home doesn't want to sell because they have the golden handcuffs of a 2 to 4% interest rate, right? Where's that supply going to come from? Well, builders, right? That's really it. And if we take a look here at the Koyfin watch list I built, some of the largest builders like D.R. Horton, Lennar, KB Home, Toll Brothers, all the majors are up year to date 30, 40, 60%. So yeah, they've just been exploding. A lot of them are either close to all-time highs or have already broken new all-time highs. So yeah, I mean, people were calling for a real estate implosion where I know prices have come down, especially in some of the hotter markets, but it seems like this supply is solving a very real problem for people.
Yeah, I was going to say, I think
Well,
this is actually really healthy where the market has sort of moved to, where you got a nice, healthy correction in prices that needed to correct. And then you also have builders still building supply, which is sorely needed. This isn't 2008, 2009. And I think that's actually a good thing that we should be celebrating, even though obviously there's still some issues in the housing market, i.e. not enough supply, but at least builders are out there building still. In 2008, things ground to a halt. And you had not only volumes collapse, you had prices collapse, but you also had building collapse. And so that set up for this housing shortage. And so at least in this time frame, we've seen a healthy correction in prices, but builders are still building and trying to close that supply gap. And so I think this is overall pretty healthy, what we've seen. It's going to be interesting to see what happens if interest rates actually do come down. We should talk about Fed and interest rates because there were some big news items on that last week. But as we look forward into the coming months and quarters, if we look at where we think rates and inflation could go, it's posing a really interesting potential picture for housing. So
yeah, why don't we go ahead and jump into that? What's the latest on inflation and rates and the expectation there? I know it looks like inflation has been coming down quicker than expected. Do you guys believe that? And what do you guys think is the future?
yeah, I think, the Fed did a hawkish pause last week where they stayed put at the current rate of interest, at the current rates of interest. And they also said that they think that they could still hike more later this year. So they paused on the rate increases, but they're still talking tough as if they want to raise rates more still later this year. But when you look at the actual inflation data, we've been screaming this, or I've been screaming this over the past few months. Like the inflation data looks actually quite encouraging. At least the official CPI numbers, they keep coming down. We've telegraphed and said that this is going to continue to happen just by the nature of some of the lagging indicators within the CPI starting to put downward pressure on CPI. You've got things like energy prices, which do actually directly translate pretty quickly to the consumer pocketbook. Those have come down a lot. And even food prices are now starting to come down somewhat. So I think these are all signs that, yes, inflation continues to cool. It was 4% last week on the CPI for the month of May. That was a little bit below expectations and once again cooling. And now if you look forward to the projections for the CPI for the month of June, which will come out here in a couple of weeks in July, the numbers look like they could be in the low 3% range. So the Cleveland Fed, I think, is forecasting somewhere around 3.2, 3.3%. And I don't know how the Fed is going to keep hiking if these inflation rates keep coming down, especially once we're in the low 3% range, maybe in the 2% range by the fall timeframe when rent prices start to really put downward pressure on CPI. So the news on the inflation side is continuing to be positive news. Now, the negative news you could say is that the Fed is still talking tough and trying to act tough and maybe making the opposite mistake of what they made last year before, where they didn't raise rates quickly enough. Now they may be too obstinate and actually hiking rates at a time when they don't need to be hiking, right? If they do that in July. I don't actually believe they'll hike rates in July, by the way. They're going to get that CPI report before they have their meeting. So I think
it looks like the market doesn't think that either, right? It looks like they're
Yeah.
pricing in flat through December and then rates starting to come down Q1 of next year.
That's right.
I
So yeah,
heard in the Fed testimony today, I heard him say specifically, Jay Powell, that from here on out, the speed of interest rate increases are not important. So sounds like maybe a nothing burger, but when you're talking about what you just said, Travis, that's where I'm connecting that. And I'm saying, yeah, even the Fed is kind of saying, yo, we don't necessarily have to keep hiking anytime soon. And it's very possible that we may not see a hike, but he's just saying that. And I don't know, you can take what you want from it, but that's when I hear what you say and when I hear what he said today, I'm seeing it as the market maybe has this one right with calling the Fed's bluff.
yeah.
I think even
And
Jay Powell thinks that he's not going to hike. again,
I think you're
soon.
probably right. I think the reason they're trying to talk so tough is they're trying to keep the stock market and the real estate market from ripping dramatically higher, because that would offset some of the monetary tightening they've done and put them right back in the place of having to fight inflation again. So I think they're trying to talk tough to try to avoid that scenario. And we'll see what happens. But, the Fed is a risk. We always say don't fight the Fed. So if they want to be assholes to the markets and raise rates in July, then they can do that. I'm like with you, though. I don't think they're actually going to do it. I think they're trying to talk this market down from being overheated.
Makes sense. All right, guys, let's talk about something that I'm pretty excited about that I want to start doing every week, which is looking at new trends, right? This is something that I think we all do as investors, is we look at different sectors of the market. We look at different keywords that are trending. And one tool that I really like is exploding topics. And I did a tweet thread, and I think a few weeks ago, we even showed some of these tools, but exploding topics is one that I like to use. And Trav, I know you've been using for quite a while. That is kind of like Google Trends on crack, and just really helps you find different ideas, both for entrepreneurs and investors, right? And so I actually reached out to Exploding Topics, and they wanted to be a sponsor for the show as well. So we've got an affiliate link in the description for anybody that wants to support the show and go check this out. But one thing I wanted to talk about as a trend that I've really been interested in over the past month or two is what's called functional alcohol. So I've actually stopped drinking about 6 weeks ago as kind of a test to see like how I feel and like, is this something I want to stick with? And I started doing a deeper dive on non-alcoholic drinks. And this is like a huge thing. Whenever I used to think about non-alcoholic beer, there was really only one, which was O'Doul's, which sucked. It was like the most disgusting fake drink thing out there. And I started doing some research on this, and I'm like, holy shit, like this is actually a huge space. And when we take a look at Exploding Topics, they do these things called meta trends, which are like larger overall trends. And then you can see sub trends. So functional alcohol is the trend. And then under that, they've got different brands, like Athletic Brewing is a company that does a bunch of different beers. And for you guys watching the video, you can see this. They've got sours, they've got IPAs, they've got all types of different beers. I actually had one of these yesterday in a restaurant. I think it was actually this one, the Upside Dawn. And Nikki, you can attest to this. I mean, this tastes just like a real beer.
Yeah, I actually hate IPAs. I hate beer, period. So when when I tested it, I was like, yep, I hate this. So it tastes just like an IPA. It's legit.
Yeah, but I mean, they've got alcohol-free like cocktails now. In Austin, I had a mezcal drink that was like a fake mezcal, but it tasted just like a real cocktail. It was amazing. So I'm like, oh, you kind of get the flavor if you truly like the flavor, which I know some people say they like the flavor of beer, but really they just like the buzz. I actually like the flavor. And like, I'll show you guys something that I've been testing the past couple of days is I've got a bunch of different brands. You can actually find this stuff all over the place. And I didn't even realize it. Like, this is like an old school, this is like a Beck's non-alcoholic. I don't know if you can see it with the lighting, but they're also making these things called like hop water or hop splash. So this is basically like a sparkling water with 0 carbs, 0 calories, 0 sugar, and it tastes a little like kind of like a hoppy water. I actually really like this stuff. I drink like Waterloo and stuff like that all the time. Here's another one, Sam Adams, just the haze, like a hazy beer, non-alcoholic. There's so many options. And I used to go the opposite direction in the grocery store. I'd look for like the highest alcohol IPAs, like 7.5 to like 9% IPAs. I just love that flavor. The problem was they were over like 200 calories. So you have a few of those. I mean, that's a meal, and you could tack on 1,000 calories of empty bullshit in a night, right? So this to me is so much better. I mean, this one is like, let me see how many calories. A lot of them are like 50, 60 calories. So a quarter of the caloric load. I just think it's brilliant. And I think this space is, I don't know, there's a lot of potential upside here, I think.
I'm waiting for them to nail low alcohol wine. I've tried low alcohol wine before, and it does not taste great. So they're gonna need to nail that somehow, like they nailed it for the IPAs. They need to nail it for. I'm not saying it has to be no alcohol wine, but like low alcohol wine would be awesome. That tastes full bodied and delicious. That same taste. So that's something that the wineries are gonna have to figure out for me.
That's not called juice?
Yeah,
No.
what about grape juice?
I'm kidding.
Not the same.
Not the same. Not the same.
The low alcohol wine that I have tried does taste like juice, and that's why it's not good.
I think it's really interesting though, this trend, because there's a bunch of data out there now also showing that, particularly among some of the Gen Z and some of the younger cohorts, that the level of drinking, even teenage drinking, is down from where it was a decade or two ago. And so the whole landscape of even social interaction is changing somewhat from a shift away from heavy drinking. So it's not like it's not going to happen. And I'm sure, you know, you go to a frat party and at any college, it's still going to be similar to what it was like 10 years ago. But I think for a lot of people, they're saying like the risk reward is not worth it anymore. And it's also interesting, like I said, to think about what that means from a social perspective. Like people spend, especially in their 20s and 30s, a lot of time at bars. Like, where does that shift? Where does that go? You know, could we see other models of places where people go to meet people and entertain each other? So I think it's interesting to think about what some of the second order effects could be here.
Nikki, didn't you do some research on that? Like looking at where Gen Z was spending their time instead of at the bars?
Yeah, like basically what they're saying is things like Top Golf are becoming more popular, or sports, you know, pickleball. Pickleball's one thing that was on the list. So yeah, people are just probably getting into more activities, more sports.
I love that.
Gen Z is going to be super
healthy.
fit and super rich because they're not spending all their money at the bar and they're going and doing activities.
I mean, look, you could definitely get lit at Top Golf, but I guess if you could have like a NA beer or something and like, I don't know, not waste a ton of money on booze. I had a little app, forget the name of the app. I can pull it up, but there's an app that will track like how many days you haven't drank. And then you can put in what you think your calories and your dollar savings are. And I added it up and I was like, holy shit, man. I can't believe how much money I was actually spending on booze. And I've saved just over the past like 6 weeks, it says like $1,300 and about 23 to 24,000 calories.
Wow.
Like that's crazy, dude.
And imagine too, if you factor in the amount of time that you don't waste like sleeping in or feeling hungover, you know, like what that leads to on a multiplier effect in your life too.
It's been great, man. Yeah. Not having a hangover and just having better weekends and feeling sharper. And yeah, it's great. I don't know. Will this last forever? I don't know. I mean, I like it for now and hopefully it does, but I don't know. Yeah. If there's anybody out there that's working on a non-alcoholic company or knows of any investments in the seed stage or, you know, A rounds, I'd be down to invest. All right. What else is going on out there, guys? We've talked about rates, jobless claims. What else is going on out there in the macro space that we need to be paying attention to?
It's a pretty quiet week overall, but yeah, we're watching signals that we're looking at to kind of gauge where the economy is headed, because we are at a point now where the concern is starting to shift away from inflation and rates. Even if the Fed hikes 1 or 2 more times, I mean, even then, I think like we're much closer to the end of that cycle than we are the beginning. And so I think the focus is now shifting to things like jobless claims, the unemployment numbers, how are consumers spending, what does business investment look like? And it's still a bit of a mixed bag out there. We're not, you know, you look at the NASDAQ and you think we're in a new amazing rip-roaring economy, but we've seen a lot of signals and things like retail sales, and even the last 2 weeks of initial jobless claims ticking up a little bit. We've seen some signs that maybe the economy is weakening a little bit on the margins in some areas. The good side of the economy is still pretty weak. But I think we could be in a much better place economically by the end of the year if we do get a stabilization and the concerns about rates and inflation continue to subside. And so I'm relatively optimistic. But again, we're continuing to watch a lot of those data points about the actual economy itself and about consumer spending. But I think, the doom and gloomers, at least so far, are proven wrong. And, hopefully, knock on wood, I think, we could be setting up for hopefully a multi-year period of prosperity. Hopefully, right?
I know, there have been a handful of bulls out there, but mostly, like you guys have been saying, it's been a lot of bear porn. And there have been, I think I read yesterday, over $100 billion of short liquidations. So basically this short squeeze over the past month that we saw in the NASDAQ, and then most recently this week in Bitcoin. I mean, shorts have just gotten absolutely clobbered.
Yeah. And what I would like to see is a better participation among some of the small cap stocks, some of the broader indices, rather than just seeing large cap, mega cap tech stocks continuing to hit new highs. Yeah. Everyone piled into those trades, into the AI themed trades. What I would like to see is more rotation into the Russell index, the financial, the financial sector ETFs, the retail sector ETFs. So I'd like to see that to really get more momentum behind this idea that we could be actually maybe threading the needle on that Goldilocks scenario.
One thing I was going to say is something we're watching on the macro front is student loan payments are going to be kicking back up in, I think, October. And a lot of people, that's what their eyes are on, is how much does that affect discretionary spending and how does that trickle into retail spending? But interestingly enough, don't they say like housing is the economy? And my thought there was, if people are still continuing to get into homes and housing starts are healthy and, home builders are cranking them out, how does that kind of help balance things out a little bit on the economy side? So I don't know if the student loan repayment is going to be as much of an impact as people are making it seem like it's going to be, but to be determined on that. So we're going to be watching that very closely.
I've also been thinking a lot about just affordability, right? And even though we have some disinflation with rates coming down and inflation coming down, like that doesn't mean that prices are falling, right? Like things are still, I think, like pretty expensive for people. And I've even noticed in restaurants just some annoying things in addition to higher prices. It's like shrinkflation showing up in different ways, right? Like if you order some kind of bowl where it used to be like a healthy serving of meat. I love my protein, right? Got to get my protein. I've just noticed it's been a lot more bullshit. It's been a lot more fillers, a lot more rice, a lot more lettuce, and way less protein. And also things like extra fees, like hidden fees on the menu, like 4%. What do they call it? Like healthcare fee, where they're tacking on 4% to the bill to pay for employees' healthcare. I'm like, why can't you just build that into the price of the food? But things like that, right? Where I know restaurants are getting squeezed, but prices are still higher. And Nikki, there's something that you tweeted as kind of a comment here on Twitter. This guy Mark said, you go to a local pool, $12 a person, or $48 for a family of 4. You grab Panera for lunch on the way home, another $48. So basically $100 for a quick summer outing. A few years ago, this trip was half this much. It's getting tough to justify even small outings, right? So I think a lot of middle-class families are really feeling the squeeze, right? Especially if you have to pay for more than just a husband and wife. If you have kids, like that really starts to add up quick. And Nikki, you said $100 is the new $20. I think that's true in a lot of ways.
It is. I freaking ordered takeout yesterday. It was $80 for literally a solid, a small ass pizza and a pasta dish. I mean, it's just dumb. Like everything is $100. Everything, everywhere you go, everything is $100. It feels. So I do think that the 100 is the new 20, and it is really hard. It is really hard for middle-class families, even with a decent salary. I'm out there right now working with someone trying to figure out where they're going to live and get a lease set up for them and all of this stuff. And it's like the housing costs are literally killing people in certain areas. And I don't know how people are doing it, honestly. It's a lot. So I think that we definitely need to see more disinflation. We definitely need to see housing kind of come under control, but it's not. And I mean, it is a little bit in certain areas, but if you even look at I looked at the Zillow housing index today, and it's starting to tick back up. It was going down and it's starting to tick back up. And obviously all of that trickles down into rents eventually. So I don't know, this persistent sticky inflation is definitely it's hurting people, and it's just hard to see for many situations. As a financial planner who's actually dealing with people's finances and talking to people very intimately about their money, it's challenging.
Weird. Well, I think that's why we just got to push and help people increase their monthly cash flow and then be wise with investing that, right? That's really the only way you can stay ahead of inflation, is like the basics, right? Don't overspend, have extra cash at the end of every month that you can put back into appreciating assets like Bitcoin, like stocks, like real estate, and get ahead of that monster, right? Like, I know the weight that was lifted off of my shoulders when I bought a house in cash and thinking like, yeah, there's still carrying costs, but it's a fraction of what it would be to hold a mortgage and to not have debt and to have extra cash. Like, it's just, it makes your quality of life so much better. Right. And I know a lot of people were squeezed. Like, I was thinking about this, like over 15 years ago. So in the early 2000s, I was in the real estate market, right? I was on the leadership team of the mortgage side of some of the larger home builders in the US at a very young age. So I got to not only have the corporate experience, but I got to see thousands of examples of like people's affordability and how most people were overstretching on their housing payments, and they were house rich, but cash poor. And, at the time I had like this was the early 2000s. I had like a $50,000 salary plus commission. So I was clearing around $100K a year. And even as a single dude with a $250,000 mortgage and a car payment and stuff, I was like, wow, I really don't have that much money left over at the end of each month. I don't know how a family of four would do it. And people today may be making similar amounts of money with prices where they are double or triple today. I'm like, yeah, I just, it seems impossible. So I think that's why we do what we do, right? Is to help other people increase their income as much as possible and then be wise with that cash flow and use it to grow their wealth quicker than the inflation monster.
The positive in all of this is that you can protect purchasing power with yields right now. So,
there you go. And what does that mean, Nikki? For the average person, what does that mean? What can they do to protect their purchasing power?
Basically, you can invest in either treasury bills, CDs. You could put your money in a high yield savings account. And even though things have changed slightly, you can pretty much get the amount of interest on your savings that equals the rate of inflation. So we're kind of like, depending on when you got your bills or your CD or what your high yield pays out, your high yield savings account. But generally speaking, a lot of people can protect purchasing power right now. And it's just, just a positive to throw in there.
Absolutely. All right, guys. Well, what else is coming next week? What should people be thinking about, looking forward to? I know on the crypto side, I'm watching that 30K level very closely, looking for another potential breakout setup. What do you guys see in the markets? What are you trading? What are any big news announcements coming down? What do people need to be thinking about to prepare?
I'll be watching price action in S&P. My thought is, first of all, this pullback is very needed. The price action was very hot. So people that are freaking out about the stock market pulling back, please don't. This is very small in the grand scheme of things, right? So I'll be watching how people respond to the dip. Are we back to buy the dip like in the markets? Remember the buy the dip frenzy where every freaking dip got bought and it was like YOLO, buy the dip? Is that the paradigm we're moving into from here? That's kind of what my eye is on, watching that dip and seeing how buyers react to it, if at all.
Yeah, we've got a big gap in the ES, and like if we look at the big leg up, you know, the S&P 500 from the last pivot low is up, call it 9 or 10% from that run. So we have had a pretty aggressive run, and we've started to pull back. So yeah, I mean, prices could come down quite a bit and still be above that 4,200 breakout level. So yeah, I mean, I agree with that. Like I think right now the price structure is absolutely bullish. We're back above all the moving averages. We broke multi-year resistance. We've been having just continued strength. But like Trav said, I mean, I'd like to see this capital flow not just into large cap tech, right? Fang and all that stuff. I'd like to see that trickle into other places. And if, you know, it's kind of like what we see in crypto where it's like first Bitcoin will take off, then other large caps, then small cap altcoins, and then the scam shit coins, right? In stocks, it's like, what if the same happens where like first it was like large cap tech that took off, then it trickles down into other sectors. Are there any sectors that are like kind of undervalued right now that you guys think could have big turnarounds?
It's an interesting question. You know, there's definitely, I think, room to run higher in some sectors like financials and retail that have been lagging so far this year. Obviously, financials, I mean, we're coming off losing 3 of the top 20 largest banks in the US back in the spring. It's only been a few months, so there's still risk there. You know, in fact, actually, the regional bank index is down about 5% over the past week or two.
What's that
But it
ticker, by
is
the way?
KRE.
KRE, that's
And
right.
yeah, but it is up over the last month. So down the last week, but up the last month, and has actually potentially got quite a bit of upside because valuations are still pretty reasonable there. So we have to avoid any incremental banking stress issues. But I think there could be some opportunities there long term to buy some of the more quality banks that are still trading at single digit earnings multiples. We've got sectors that are washed out, like the cannabis sector I've talked about over and over. There's been a little bit of optimism that there could be a positive legislative catalyst coming there in that sector this summer. I don't know. I'm 50-50 on that. I'm still pretty pessimistic that the right sides can come to the right agreement. But, you know, there are sectors like that. You know, we've talked about the nuclear and uranium sector, which has been kind of quietly grinding higher, at least uranium prices, and some of the miners have. Maybe that continues or gets into a squeeze situation. Again, it's kind of a very small sector of the market. But yeah, I would really be focused on watching what the Russell index does, what the S&P does versus the NASDAQ to see if it kind of pulls the leadership away from that. Other than that, it's kind of a quiet time in stocks over the next couple of weeks because we are ending Q2. Companies will go into the blackout period. There's not a lot of macro data on the calendar over the next 10 or 12 days. You'll have the Fed Chair Powell speaking some more, but other than that, not a ton. So really, I think you start to pick back up in like late July, mid to late July. So, you know, go enjoy your vacations over the next couple of weeks. I'll be doing my research. I'll be kind of checking out some more AI tools, just kind of poking around, seeing where there might be some opportunities. But overall, it's, I think, relatively uneventful time right now in the markets.
Yeah, so just go buy Bitcoin.
That seems to be where the action is right now.
That's right, man.
Bitcoin
yeah, I mean,
will save us.
Taking a look at the Russell 2000. So yeah, large cap broke out, tech broke out, but the Russell 2000 is still below that 2000 resistance level. And then, yeah, if we take a look at year-to-date performance on the indices, as of today, the NASDAQ is up 37-ish%, where you can see the Russell is only up about 6 or 7%. So definitely a big lagger there. And the S&P is up kind of mid-range, about 15%. So Bitcoin again leading the charge.
The second asset that was listed on there is something we'll have to talk about maybe next week, which is Japanese stocks, and that market has been on fire. So there could be some interesting plays there potentially, but you know, Japanese market, a lot of.
Did the Nikkei break a new high? I haven't looked at that chart in quite a while, but let's just pull that up real quick. Yeah, so the Japanese index is up about 30% year to date. Let me see. I've got it buried down here somewhere. There we go. Yeah, what's happening in Japan, Trev?
There's just been a lot of really good economic news there. The Japanese economy looks like it's been strengthening over the past few months. You've also had the central bank in Japan being much slower to raise rates than other central banks. So you've got a pretty positive story there. at the individual stock level, there's been a bit of a push as well for a lot of Japanese management teams to get smarter about their capital allocation. Japan has long been a market for like the last 10 or 20 years where value investors kept getting burned because there's all these Japanese companies that have good financials, that have really strong balance sheets with a ton of net cash, but the management teams just don't do anything about it. They don't do increasing share repurchases. You know, the valuations remain very, very cheap relative to other markets, but it's like it stayed that way. So now you've started to see a little bit of shift in some of the management teams becoming more shareholder friendly. You've got the tailwind of Warren Buffett buying more Japanese stock, and you have pretty good economic data coming out of Japan lately. So it's all sort of led to this big upswing in Japanese stocks. And the question is, does it have further legs, or is it going to be another trap for value investors? Yeah.
Interesting. Well, I think that is an excuse for us to have to go skiing in Japan in January, which we were talking about doing anyway. But yeah, I think that definitely needs to be a tax deductible business trip, right, Nikki?
No comment.
And on that note, thanks for watching and or listening to the show. Make sure to subscribe to the podcast on any of your favorite podcast platforms. Leave us a review. It really helps out. Also, check out any of the affiliate links in the bottom. We're going to reinvest whatever revenue we generate back into gear for you guys so we can continue to do this show. And yeah, any final thoughts before we log off here, guys?
Still have a non-alcoholic beer.
I do have one thought, which is we'd love to do another big Q&A episode. So go shoot us some questions on the We Talk Money website, or just add us on Twitter, and we'll try to do some more Q&A because I love doing that.
Yeah. Well,
you can also put if you have questions, you can put them in the comments. I will scan the comments and pull them out. So you can do that too. So go to wetalkmoney.com to submit a question, or just put your question in the comments below and I'll grab it for us.
Awesome.
And join our wealth building community.
wetalkmoney.com/community. And we will see you guys next week. Take care, guys.
Cheers.